Hey everyone, this is Dan. I'd like to introduce you to a very good predictor for imminent market crashes. This indicator is none other than Google Trends. First, let's see how we can do a search in Google Trends. We'll use the Google Chrome web browser. You type in the address trends.google.com. Then you type in your search words, market crash. Then you select the timeline. In this case, we'll select 2004 to present. Let's look at this chart from Google Trends. The ups and downs of the blue line here represents the number of searches on the keywords market crash. Or you might say that the line represents the level of fear. The higher the line, the more fear there is in the market. It is a relative scale. The highest point here is 100, and the lowest point is 0. Most immediately, you will notice that there are a few peaks in this chart. Let's look at the first peak here. From the timestamp, we realize that the peak happened right in the middle of the 2007-2008 market crash, which took the market down 56%. The first time when Google Trends peaked, it was in September 2008, which is around here on the S&P chart. In other words, if you had bought an S&P indexed fund back then and you saw this chart and sold, you would have cut your loss in half. The next peak on the chart corresponds to a 14% drop. The next one, 9% drop. The next one, 19%. And then a 34% drop. Notice the words note on this chart. The footnotes on the Google screen tell us Google made improvements to its algorithm at these points along the timeline. That might explain why a smaller peak on this chart at this point represents a bigger drop in the market than this peak. Let's look at this last peak in more detail. We will use a 12-month period in Google Trends. You can see the line peaked during the week of February 23rd, then peaked again during the week of March 8th. These two peaks correspond to this drop in the S&P index, which took the market down 34%. When the first alert showed up in Google Trends, it was about here on the timeline. In other words, if you had owned S&P index fund and sold at this point, you would have avoided more than 75% of the loss. You might say, I can't wait for a week to tell whether the market is crashing. I want to know every day whether the market is going to crash tomorrow. Yes, there's a way to do that in Google Trends. Let's look at the 90-day chart. On this chart, each day is represented by a point on the line. You see these peaks correspond to two market dips of 8% and 6% each. Interestingly, the third peak, which is not as high as the other two peaks, has not led to a market dip yet. Rather than saying Google Trend is wrong, I would say the fear level in the market is building up. We now have more reason to keep our eyes on the chart just in case it jumps up in the next few days. The last point on this chart is November 19th, but today is November 21st. So what's happening to today? To see how today is, we need to bring up the 7-day chart. On this chart, each day is represented by a section of the line. These two sections are November 20th and 21st. If you compare them to November 19th, you can see today and yesterday are lower. Therefore, we can estimate the most recent level is around here on the 90-day chart. That means we're still very far away from having a crash. At this point, you might say, okay, you've demonstrated that there is a correlation between Google Trends and the S&P index, but I own AT&T, Apple, and other stocks. What does Google Trends have to do with me? The answer is, as S&P goes, so go the other stocks. Let me explain. We'll look at the February crash this year as an example. The S&P crash started on February 19th. It bottomed out on March 23rd after losing almost 35%. If you plot AT&T against S&P, you can see AT&T also went down 30%. Now we add Apple Computer, which also went down 30%. When a major crash like that happens to S&P, 9 out of 10 stocks typically also go down with it. The S&P index is calculated based on the price levels of 500 leading stocks in the market. It is designed to represent the overall market. The moral of the story is, watch Google Trends no matter what stocks you own. Thank you for watching. Remember to click the like button and subscribe to my channel. If you have a few more seconds, hang in there. I'd like to show you some reference information. In the meanwhile, I wish you the best of luck with your financial investments. If you wonder when the market is going to crash again, check out a video on this topic in my playlist. The following is a list of the analytical tools I use and the information I look at every day to develop my investment strategies. After doing hours of research, I summarize my findings into a few minutes of video for you. Links are provided below this video for you to learn more about RSI, Bollinger Bands, the role of the Federal Reserve Bank, etc.